Today, I want to share with you an execution I took for the market maker sell model. As you can see right here, these are my entries, and just to make sure it's clear, there they are. I had one entry off of the inversion right here towards this low. I took another short here, but I stopped out thinking that we may go higher. Ended up getting back into it when we confirmed that we were going to respect this level right here, this support turned resistance, and ended up selling on the sell side right here. We're going to go over this, why I took this trade, and to do this we first have to start and look at the higher time frame to really get our bias for the day. Here we are on the daily time frame on the NASDAQ. As you can see, we've had a pretty bullish run so far, and we've finally have come up into this daily fair value gap all the way back from July right here, and we broke through that with aggression, continued higher. So our next target is an inefficiency and a swing high. So we have this swing high on January 18th paired up with this January 13th SIBI. When you have a bullish trend like this, you never want to try to pick the tops because we could blow right through them. But when we start going down, you're going to notice that we are sitting right around the consequent encroachment. So I knew something was going to happen. Yesterday was CPI, this morning was PPI, and then this afternoon we have FOMC. Really, we could have gone either way. Moving down to the 1 hour time frame, what I wanted to see if we were going to move higher was a move into this 1 hour fair value gap. Why? Because fair value gaps are going to be the reason price moves higher. For example, we have this move here, we fake higher, we push really strong lower, fake everybody out, and then we explode higher. So I wanted price to come down into this 1 hour, maybe even into this one because it's pairing up with this order block right here. I like overlapping PD arrays. So for this discount PD array, I was looking for either this one or this one off of the open candle. So 8:30 we had news come out, and as you can see on the 5-minute, here's our news candle at 8:30. The PPI came out and we started moving higher. We eventually started moving down, and at 9:29 we hit the sell side here of the pre-market. I mean, we could have moved all the way down here, and that's what I was waiting for, but we didn't, and we shot up higher. I didn't take this inversion, which would have been a really nice play. This inversion basically takes this fair value gap. We close above the fair value gap after hitting sell side liquidity. You get in for an entry and you target this high. Well, we could have got in right here, had a bit of a drawdown of about 626 to about 619. So you're looking at about 7 handles. That's not terrible. I prefer to have a 10-point stop loss at least. And then we moved higher, breaking that high. So at this point, since I missed that, it looked like we're bullish. I'm like, I don't know where we're going to turn, but based on how aggressive we are and knowing that FOMC is later this afternoon, I'm looking for signs that we could start creating a market maker sell model, because we have this sense of consolidation. We run the stops briefly, stay within this consolidation, move higher. Here's our accumulation phase, and we move higher. As soon as we had this accumulation phase, I drew out this line because this is going to be a key place of resistance if price runs through it, not just to it, but runs through it. Going back here, we make our higher high, and then we have a push lower. This would have been your low risk buy. I did not take this, or your low risk sell. I did not take this because honestly, we're bouncing off an order block right here. If we in fact were bullish, this could have just exploded higher. There's no way to know if we were not going to go higher. Like I said, we can't predict the tops. I'm looking for my second confirmation. My second confirmation is an inversion, which is what I missed down here. We have this inversion. So we have price come down. We have price refill this CIVI or this BISI. We come higher, reject off of this, which we could have just exploded right through and continued higher. But then we come down and we close beneath right here this fair value gap, creating an inversion gap. Now my inversion model I built off of Doji's Dungeons, which is ran by Ryan. His model is where when you close below a inversion or close below a fair value gap, you target the next low. Well, I did not wait on this case because we were pretty aggressive. We made a really strong low here. We came up to about right here with about 15 seconds within that 1 minute candle. I took my entry and we played through this low right here. I ended up getting back in right around here on this green bullish candle, thinking that we could just continue lower right here, but we didn't. So I got out and realized I overlooked my level right here, which is basically this bullish order block. The low of this bullish order block, or the low right here, we want price to move into it. Actually, if we just move this up to there, you're going to see how pretty dang accurate this is. Look how accurate that is. Look how it literally comes up and touches. After I didn't get in here because I thought, well, if we are bullish, we could continue higher. So I wait, we break a little lower, but we don't take the sell side yet. And as soon as we came back up to here and we didn't violate this support or this resistance, that's when I took my second entry and played to the low right here. And that right there is the market maker sell model this morning on the NASDAQ. If you like videos like this where I break down trades, also reviewing ICT trades, consider liking, subscribing. Thanks for watching, guys. We'll see you in the next video.